Well, you're still watching Business Nigeria. Well, let's get to our second point of discussion. Now, the government's efforts to promote investments in the oil and gas sector have been driven by the need to address the country's revenue crisis and stabilize the economy. More recently, the federal government issued 3 executive orders referred to as the EOs, aimed at providing fiscal incentives and credit specifically for deep offshore and midstream gas companies to promote transparency and, of course, encourage investments in the petroleum sector, ensuring contract procedures, costs, and timelines are reduced. With the country's vast oil and gas reserves, there is immense potential for foreign and local investors to participate in the country's oil and gas industry, fostering growth and development. Well, let's get talking now and make more sense of this. I'm being joined by partner, energy and chemicals leader at Deloitte Africa, Mr. Olumide Esson. He joins us live from the United Kingdom. Thank you. It's good to have you on the program.
Thank you and good afternoon. Can I ask that you increase your volume a little because I could...
barely hear me?
Yeah, I can hear you, but
okay.
It's kind of...
All right, we'll do that. Now, let's start with understanding the executive orders. There are 3 of them. And for real, I would like you to help explain how this would help to support the decade of gas, which is what we'll be looking at. I hope nothing contradicts each other in this. So tell us more about this executive order and how it will help us achieve the objectives of the decade of gas.
Thank you, Tolu, and good afternoon, viewers. Let me start around the context. We all know that Nigeria is vastly blessed with oil and gas reserves. And I think more than even we think of, we are more of a gas nation, of a gas province, with 206 TCF in discovered proven reserves. I believe if we explore more, we will see that we can easily double or triple that number within years. I guess the question then is, what exactly are we doing with the gas? And for many who may be familiar with the industry will know that we have 2 types of gas plays, those we call associated gas that comes with oil, and those that we call non-associated gas that's just on their own. In the past, government had tried to encourage investments in the gas value chain by granting what is then called AGFA, which is an acronym for Associated Gas Framework Agreement, which basically enables players in the gas space to consolidate their costs alongside with oil. Why that is important is because when they're able to consolidate the cost of the gas development activities with oil, they're able to get tax relief on that at 85%. Whereas the income from the gas activities is taxed at 30%. So that kind of provides opportunity for gas projects to be economic. And that had been in play in the past. So that works very well for largely associated gas projects, and in fact for non-associated gas projects for companies that have oil in production. However, we have this category of players who don't have oil and who are not benefiting under this so-called AGFA. And so they just have non-associated gas assets. This gas, because gas sells for a fraction of oil, just that you understand what I mean here. Today, the oil price is notching towards $90 a barrel. The gas equivalent of that in what we call barrels of oil equivalent is just roughly between 10 and 15% of that, meaning if you were to sell gas which is equivalent of a barrel of oil, you probably will get somewhere between $9 and $15, somewhere in the middle. So oil is priced more in the market, priced better rather than gas. So the question is, how do we then make our gas assets economic? How do we make them attractive to investments? That is essentially what government has tried to address, because the operators and stakeholders have been clamoring over the years that we need to do more to make gas investment more attractive in Nigeria. And government must be given credit. I understand this has been a lot of work, in the government circle, particularly in the Office of the Special Advisor on Energy, to make this a reality. And what you see now is a system put in place to encourage investments in the gas business. So in this business, because of the relative value of oil to gas, when you are investing in non-associated gas, your profitability to an extent depends on how much of liquid you have in the non-associated gas. So if you have so much liquid, if the liquid to gas ratio is high, it means that the liquids you produce, for example, condensate, you can sell at the price of oil, if not more. That helps the overall economics of that project. But if your liquid to gas is low, then the economics is likely to be challenged. And that is why you will see what the government has done is to grant, a graduated, gas allowance and gas credits to say, if you have less than 30 barrels in a million SCOF, we'll give you the lower of, 30% of the fiscal price or $1 as gas credit. If you have between 30 and 100, then we'll give you 50 cents per thousand SCOF or 30% of the fiscal price, whichever is lower. And if you have more than 100, it means that government considers that, well, that is a relatively better place to be if you have more than 100 barrels of liquid in a million SCOF. So, and government saying in that case, I will not give you a credit. Instead, I will give you an allowance, which will be the lower of 50 cents or 30% of fiscal price. So what government has done essentially is to say the more liquid you have in the gas, the more likely it is to be economic on its own, not needing incentives. But the lower the liquid, the higher the chances that you will need some targeted incentives for it to work. We need the gas. We need the gas for dollars. We need the gas for industrialization. We need the gas for power. Let me say this. Our economy is challenged at the moment because the foundation is being fixed. So most people will be reluctant to bring in, capital into the country because they also think, when I bring in capital, do I repatriate my capital given the exchange rate issues? Yeah, fine. Even though that is being worked on, it would not happen overnight. Whereas the oil and gas sector is one sector where if you bring in dollars, you can take out dollars because what you're producing is also sold in dollars. So there's no currency risk. And so the question is, if there's no currency risk around oil and gas investment, particularly in the upstream, why can't we capitalize on that? Why can't we do more on that? Encourage people to bring in the top dollar, for investment in Nigeria. The past 6-7 years, close to 100 billion have come into the continent, and Nigeria had received less than 5% of that. And so government is beginning to untangle the reasons why we are not getting the best of investment to exploit and maximize the gas reserves that we have. That is the bit about the gas incentives itself. The other bit is about the contracting process. Because of the processes we have in place currently in Nigeria in the upstream, and particularly in the JV companies, it takes a long time to conclude contracts. And that is not helping because the world is fast-paced. And so, if it takes you more than 12 months to conclude a contract, most likely the price at which you started is not the price at which you're going to finish or eventually execute the contracting. And so you see this vicious cycle, you start, by the time you end, the price has changed, you need to go back to the drawing board. And government is saying, no, we need to find a way to work around this, to make the processes we have more efficient. For example, the approval limit, which used to be $500,000, above which you must revert to NWIMS, has been changed to $10 million. So that way, operators have a leeway. They can respond with agility, to contracts and get this done and more quickly. I also like the tweaking around the local content. We all want local capacity to be built, but sometimes there is a delicate balance between investing in local capacity through instruments of law and policies versus ensuring that we can easily just give this to the person who does not need training but who can get it done almost immediately. That delicate balance is what I think government is trying to strike now to ensure that we don't have unnecessary cost premium, because if you talk to investors around the world right now in the oil sector, they will tell you Nigeria is a lot more expensive province to operate than other locations. And that is due to a lot of factors, including our security situation, also our contracting process. You will recall the Business Facilitation Act was passed not too long ago, But the idea is to make the ease of doing business in Nigeria better, reduce the contracting cycle, and thereby reduce the cost, additional cost premium on oil and gas contracts. So if you sum this together, government is targeting a situation where people can bring in more money and invest in Nigeria. Let me just talk about the last bit, which is the midstream incentives as well. So government is incentivizing not just the upstream for production, but also the midstream for gas processing activities, including liquefaction, production of LPGs, and the rest of that, because you need to get to a point where when you look at each of the value chain independently, they must be economic. Okay, so if I need someone who just want to come to Nigeria to operate a floating LNG, for example, when the person runs his economics, it must make sense. It must bring positive returns for the person to invest. If someone says, I just want to stay in the upstream, produce gas and sell the gas, it must also make sense. The economics must be positive. So when you look at this, this is certainly a right step in the right direction for Nigeria in our drive to monetize the humongous resources we have in terms of gas.
That was really detailed. You took it one after the other. Yes, from the tax incentives exemption thing to the local content thing. You picked it one after the other. But yes, you've hit my second question, because I wanted to ask you that, are we sure this would make us get an expected investment? Because 5% of that amount is so small coming to Nigeria. So do you think that this will really open up that space? Do we also have the capacity, when we talk about local content, to run most of this business midstream or downstream and onshore? And you know what I'm talking about. Do we have all of this to also complement what federal government is doing? At the end of the day, are we sure these EOs will help actualize expected returns?
So I would speak obviously, because if I have a crystal ball to look into tomorrow, I'll probably be doing a different job than what I'm currently doing now. But from my I think that this certainly will move the needle for us. This will make, a lot of the projects, particularly, for example, in the Decade of Gas program, will make them more economic. And, for investors and businessmen, okay, they're looking for a return that matches the risk of investment. So if we are competitive from a returns point of view, they will bring their money in. When they model economics for Nigeria, they will use risk adjusting modules. And that basically means that they factor in the risk of conducting operations in a developing country into the economics. And if it is positive for them, they will bring them on. I believe that this will unlock investments in the upstream and the mainstream. We've advocated for this for a long time. And so, government listening to us and granting this exactly for that is essentially saying we're also ready for business. So I think this will, this certainly will impact the way we do this. Remember, this is trying to address the end-to-end problem of the industry. One is the cost issue, which we know partly had to do with things like insecurity. Government is working on that, but also had to do with the way we contract in Nigeria, including the NNPCL model, but also the NCDMB. And this is what is being tackled already by government. On the other hand, so say, well, if we still have inadequacies, systemic issues to deal with, yeah, maybe we can compensate for that by way of fiscal incentives, by way of gas tax credits, by way of gas tax allowances. And what that does essentially is to say, well, look, when you run the numbers, country A, country B, country C, and you put Nigeria there, if the returns in Nigeria is better, investors will come to Nigeria. So I believe this will yield the result. Everybody is now looking up to government for implementation. Okay, I believe that this will be implemented to later. And I know government has said that they are committed to this, and we want to see it happen. This way, we can earn. We're producing maybe about 1.6 million barrels now. But if you look at what we can do also from a gas perspective, to expand the scope for gas, we would earn a lot more money, and we will not just rely on, for example, LNG alone, but we have several other floating LNG, several other midstream companies, pipelines companies, that are able to bring resources into Nigeria, do their business, pay taxes in Nigeria, pay dividends in Nigeria. So, it helps even with dollar liquidity in the system.
Great stuff. And this doesn't contradict the PIA in any way. For the layman, let's understand, because many have also said the PIA is already being effected. These executive orders, so can we just get a clarification around that?
Okay, so the PIA greatly helped. The PIA greatly helped. But like I said several times, on TVs in the past, that the PIA is a work in progress, right? It's the beginning of a journey. So, as we walk along, if there are other improvements we think we can do on the side, including this one, it makes it perfect. It only helps to consolidate more on the gains of the PIA. So the PIA has helped, particularly if you're looking at, oil production, for example, the PIA, did really great. But if you're looking at gas, I think we needed this sort of executive order to compensate for, the gaps we still have despite the PIA. And you will see that government also included a note that one thing is to work around the non-associated gas project, but I still debate about deep water assets, which Nigeria is also vastly blessed with, deep water oil and gas reserves. And government is saying, well, now all the parties in government that are involved need to create commercial enablers to make investors to come, and also exploit this part of our reserves so we can, get money, industrialize our nation, and for the betterment of the common man in Nigeria. You did raise a question earlier as to whether this will help improve local capacity. Again, issue of local capacity, it's a journey. NCDMB has done a lot in the past, but there are still gaps. We still don't have competencies for everything. So it's going to take some time to get there. It's part of my view, industrialization. Part of the way you measure whether a country is industrialized also is part of the local content capacity in the country, and we are not there yet. So it's a journey. Government is committed to local content development, but at the same time, you must balance this with the need to swiftly be able to execute projects, without wanting to build capacity becoming a roadblock.
Very interesting conversation. But before I let you go, Mr. Esson, what do regulatory agencies, the federal government cannot do this all alone. What should regulatory agencies, or the oil and gas industry, what should they do to help the federal government in achieving ultimate aim at the end of the day, which is transparency, attracting investments, and of course, addressing challenges in the oil and gas industry? What sort of support would they need from agencies and regulators?
For you and I, who are regular men on the streets, when we see the regulatory agencies, whether it's the Nigerian Upstream Petroleum Regulatory, Commission, NUPRC, or the NMDPRA, or is the FRS, or is the NCDMB, when we see them, we see government. So I believe that within the government machineries, I'm quite sure that necessary mobilization is already being done to ensure that they all respond positively and support the industry, support the government, make this to achieve the objectives government has set. I believe that we all as citizens want the best for our nation. I don't believe there is any ministry that want to go contrary to an executive order from the president. So I think that, it's possible that within those different agencies of government, they are, busy preparing their guidelines on how they want to implement this. But certainly, the president has spoken, and this must be implemented. Yeah.
What do you see? Let's look at the future of Nigeria's oil and gas industry following the proper actualization implementation of all of these orders. What do you see? Give us a timeline.
Well, so I can only start flowing gas.
Oh, okay.
Have a lot more significant gas produced and sold in Nigeria locally and also export. Remember, gas we need for power. Gas we also need to export and earn foreign exchange on. We need clean cooking fuel in form of LPG also, which is going to come from gas. So I think in the coming years, 4 to 6 years, we will see the significant impacts of this bold step being taken by the government.
Brilliant conversation as usual. I must thank you, partner, energy and chemicals leader, Deloitte Africa, Mr. Olumide Esson. Thank you for making us understand this